Joining us to break down what this means, we are joined by Professor Emeritus of Economics at the University of Maryland, Peter Morici. Dr. Morici, thank you for coming on again.
Nice to be with you.
I don't quite understand this bank acquisition because Credit Suisse recently got a $54 billion infusion of liquidity, I believe, from the Swiss National Bank. So that's $54 billion again on the balance sheet, and yet UBS is going to buy it for $3 billion when it was at one time worth $90 billion. So how does UBS acquire something that has that debt load for such little money?
Well, let's be clear. The money that was advanced by the Swiss National Bank was against securities and loans that are good loans that will be repaid. There's a difference between just giving somebody money and having solid collateral that will pay out. And generally speaking, central banks loan money on that basis. What you had here was a run on the bank, a crisis of confidence, because Credit Suisse had a series of regulatory problems, the latest being some accounting problems. It was going to have to restate its books. And it does have one money-losing operation. That's its investment bank, First Boston. So its profitability has been very low. My feeling is that it was a solvent bank before the crisis of confidence, and that this is an unfortunate example of the Bailey Savings and Loan in a Wonderful Life. The bank long ago should have been better managed, but that doesn't mean that it was a bogus operation. This is not a fraudulent operation or anything like that.
But I did read a lot about Credit Suisse over the past week, and my understanding is that it's sort of been limping along since the financial crisis. It's been 15 years of, this bank isn't that well run, it's not doing that well. And then finally, there's a crisis of confidence in another bank here in the United States, Silicon Valley, and then Signature Bank, and then people take a deeper look at Credit Suisse and they go, oh, I still don't like what I see, and now it takes on a different form. Is it just the lack of confidence in the overall banking system that causes Credit Suisse to look even weaker than it already did?
My feeling is that the bank was a troubled bank, but it wasn't an insolvent bank. And the stock market crash, the share prices fell well below what the implicit value of the firm was resold. And this was an example of a herding effect. The thing to remember is the Europeans haven't done as good a job as the British or the Americans in cleaning up their banking sector. It is hardly the only troubled bank or the only bank where there is trouble. For example, Deutsche Bank, some of the Italian banks and so forth. I don't know that they could withstand a deep recession very well. So there is that problem. But there is a general lack of confidence in European banks, I believe. And the way the Swiss authorities behaved did little to encourage more confidence. For example, by wiping out the bondholders but maintaining some value for the shareholders, the equity investors, they broke the basic rules of bankruptcy law. They acted in a high-handed fashion. And in doing so, it makes investors in Europe very skittish about the banks. The European Union says those rules wouldn't apply with us, but you never know what rules are going to apply when a government gets in a crisis. It's important to recognize, for example, that Italian banks encourage their what would be normal depositors to buy bonds as opposed to put money in deposits. That bonds are much more important to some European banks than they are to American banks. And therefore, this causes a lot of skittishness. If I were an Italian right now, I'd be very quietly selling my bonds if I could get face value and putting my money in an American money market fund where it would be safe, like a Vanguard fund or something.
Well, here's why this matters to the average everyday American. If you're just waking up and seeing this pretty deep discussion of economics, the deal is if the fewer banks that we have confidence in globally, the fewer banks there are to eventually take over these banks in which we don't have confidence. And then we don't have confidence in the entire banking system. Dr. Morici, it feels like whack-a-mole, that once you're figuring out some way to fix this one, now you have a problem over here.
Yeah, and Mount Vesuvius can erupt and wipe out all of Europe. I don't think that we're in that kind of world right now. But what we do have is a crisis of confidence in regional banks, because just as the Swiss authorities have behaved badly, so have the Treasury and the Federal Reserve and the FDIC. They have vacillated and moved slowly with regard to SVB and now Republic Bank.
Thanks for watching. Go to newsnationnow.com to find NewsNation in your cable lineup. And don't forget to click the red subscribe button below to get more of NewsNation's fact-based, unbiased coverage.